With 2,000 or more ETFs out there, there's a lot to choose from. We went through some of the biggest ones out there. Thomas, what are some other ETFs that you're watching?
Well, one of the ETFs that I really like, especially from the buy and hold perspective, is the Noble, NOBL, the Dividend Aristocrat tracking stock. Now, the Dividend Aristocrats are a member group of the S&P 500, but these are the stocks that have increased their dividend for at least 25 years. Now, among the differences between the Noble and the SPY is that you're going to get a higher yield, you're going to get more aggressive dividend growth, enough to offset inflation. You're going to get reduced volatility. I think it trades with a 0.65 beta compared to the S&P 500, which is going to protect you on the downswings and set you up for bigger total returns over time. Over time, the ETF itself tends to match the S&P 500, but the total returns are much bigger because of the yield and reinvestment and the distribution growth.
Chris, how about you? What's another ETF that you follow?
Well, one that I've been following for a little while now is it's called the Global X U.S. Infrastructure Development ETF, and that's a mouthful. And the stock ticker is actually PAVE, P-A-V-E, which makes a lot of sense because this is dealing with infrastructure stocks. We're talking about the companies that do the things that help us with the roads and the bridges and all of the infrastructure that the United States needs to build. This has been taken off since 2020, got an even further lift from the Infrastructure Act that passed in Congress in 2021. It's only been actively trading for about 7 years, but the chart just looks phenomenal since 2020. Now, some people would say that all of the growth in this ETF is priced in because the infrastructure spending has already kind of made its way into the economy, and that this stock may be starting to stumble a little bit. However, I think with the likelihood that the Fed's going to cut interest rates coming in September, I think that could act as a catalyst for this ETF. Because the companies that are in this ETF are going to be the companies that are going to benefit a lot from rate cuts.
Thomas, any thoughts on Global X?
I think Global X is a great choice for a buy and hold portfolio. As far as ETF goes, it will add great amounts of diversification
Yep.
because infrastructure is what's known as a real asset. Real
Yeah.
assets are things like roads and bridges and dams and seaports, things that you can get a hold of. A lot of those businesses and operations and the building projects are protected by government contracts. Their payments are tied to inflation. So it's a great way to reduce risk, offset inflation, and get portfolio diversification away from just straight stock equities.
I'm surprised, Thomas, I haven't heard you talk about the Russell yet. I know we've talked about it before.
Right.
Tell us a little bit about that ETF.
Right. So right now, I think the Russell 2K, the IWM is a great choice. It's experiencing volatility along with the broad market. We're into some risk off atmosphere, a little bit of sector rotation, just some fear because of FOMC and the outlook for interest rates. But the FOMC is expected to cut interest rates. Lower rates are known to be good for smaller cap stocks. The Russell 2K should outperform the broad market over the next few years. And within that small cap arena, there is a much larger opportunity for growth. Now, the Russell 2K is not going to produce quadruple digit growth, but many of the stocks within it will. And that'll result in high double digit to triple digit growth for the Russell.